All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for December 2nd, 2021. Here's the schedule for the research weekend. We're going to go Saturday and Sunday. We're going to do a 3-hour morning session from 10 to, with 3 1-hour chunks, 10 to 11, 11 to 12, 12 to 1. I'm going to be strict on the time this time. 20-minute briefings, 35 minutes for discussions. Take an hour lunch, then 2 to 3, 3 to 4, 4 to 5, and then as needed, a 7 to 8 and an 8 to 9 early evening shift. And so I've got all the papers in hand for let's see, for this crew, just getting their preferred times to drop in. I'm expecting, I actually have a paper from Jeff. I think he's going to give me another one. And I'm expecting papers here. And I may get them from Morris and Carolyn Rourke, and then the other guys that are for observing. And I'll get those dropped in. But we will do the presentations and record them in this room. Follow-on Q&As are possible for people that sign up after the fact, want to send follow-up questions after they viewed the recorded sessions, and I'll send out instructions on that as well. So that's the schedule there. Ken H, I see you in here. Do you have a preferred time? I can pencil you in now. Well, just send me an email with your preference. Glenn and Worth were very flexible. And I'm going to present Lisa's paper. I've already reviewed it with her, and she's got family issues to work on this weekend, and I'm very familiar with her system, so I'll be covering that one. Okay. All right, let's see. I got my third vaccine this morning, the Moderna. The guy said, yeah, you're going to be a little sore and have discomfort today. And I said, yes, this is probably already the high point of my day. And that was correct. I'm feeling it right now. All right, let's see what we got here. So today was a perfect response to yesterday's discussion. If you go back and look at yesterday, we said put a hybrid frog box on the close and then be ready for a large move in either direction because of the increased volatility and because it was at a critical state. We said be ready for that, or be ready for that, and we got that one. So that one was available right from the open. The move up was not as big as the move down. So if we were to calibrate this right, so the up move was there, the down move was this one. So you can see that was, considerably different. So it's harder on the upside. There's more, the fear dominates the greed. So that's why the up moves tend to be smaller. But it did hold at Z-2. It did hold here at Z-2 right at the 5% sell-off. Got the strong move up through the RL10, Z1, the baby dragon, and right to the edge of the dragon today before it backed off a little bit. So we're not out of the woods yet, because you'll notice that the P-star has flipped and is still pointing down. The RL30, which peaked and rolled over here, is still extending its way down. So until price gets through that, until price gets through those two, then this is still just tactical space to the upside. So I'm looking at this again as just another day in a critical state market, and I'll be ready for a continuation pattern or a collapse back to here. If it collapses back to the 10-day low, which was today's low and yesterday's low, then I'm expecting a move down to Z3. That would not be surprising because the size of this downward move is still baked into the cake. We could still see that tomorrow, and that would take it right down to the 30-day low. Of note, it took only 8 days to erase 22 days of gain. So it falls 3 times faster than it rises. For those of you keeping score at home. Other than that, just tactical plays. Let's see what the Richard said. Is it time to take the swing trade course? I would appreciate you not asking questions when we've got the subscribers in here. This is for the subscribers, please. Thanks. I don't mind you listening, but it's distracting. All right, the S&P gave us 1.53 today. The Dow was a little better at 1.8, and the Russell small caps were up 2.8 for the strongest move of the day. The downward or the underperformers, emerging markets came in at a respectable but underperforming 1.2. The Qs were at 0.72, and Treasuries. The defensive plays still were in the green, so they didn't give up any. So this is an indication that the defensive players are not convinced yet that the upside is there, that they're willing to hold on to that position. They didn't get shaken out, and that they're holding treasuries for a little longer, and it's above 150. So I take that as a positive sign for the treasuries and a word of caution to the equities. And if you check this column here, you see all the ones that are in daily winter. That should tell you just how troublesome the market is right now. In fact, only Apple and treasuries are in the daily summer at all. Those are and also VIX. You don't really want to see VIX in daily summer, right? Okay. Let's look at the underperformers first, because there's fewer of them, and those will be the ones that dominate if the market rolls again tomorrow. So ARC Genomics, S&P, discretionary, moonshots, consumer staples, technology, and blended commodities, Bitcoin, lithium, ARC Innovation, 0.43. The FANGs were basically flat. Clean energy continued a second day of underperformance. Ethereum off a fraction. Wheat and precious, 1.16. Blockchain, blended large cap cryptos, VXX down 6%. So that's a indication tomorrow has a chance for some legs. Coinbase underperformed 3%. Square, Tesla, Apple, and Microsoft in the underperformance categories. Which tells you something how churning this market is. When tech has a pretty good day, the markets have a pretty good day, but Microsoft and Apple and Tesla are in the red. That's sort of an indication how fragile this really is. Robinhood, Bitcoin, Virgin Galactic all underperforming. All right, to the upside. agriculture, materials, wood, which is lumber, S&P bio, the other lumber 2.3, oil 2.6, commercial real estate 2.8, Mexico energy finance, oil exploration, marijuana, Brazil, and then the outperformers. TX, the steel company, 6.4, PayPal, 4.3. That seems to be doing much better than the Squarespace. When Jack Dorsey left Twitter in order to run Square and then rename it as Block, that turmoil that created, I think, is starting to create some separation. So PayPal has been crushing it, whereas Squarespace has not. So PayPal, the disruptor, 4.3. John Deere, Alcoa, and Cliff. So the metals again did pretty well. There's TX, Alcoa, Cliff, Devon Energy, 1.8. So selected materials, metals and industrials. But I like the finance energy combination. That's a good sign because that gives you a little bit of width. It's not just tech leading the way. And the Russell was a very good trade today with a 2.8 coming back from oversold conditions. All right, let's take a look at the traders today. Try to remember who these are. All right, this is John M. And he's working I think that's the Australian dollar versus the US dollar perpetual swap. So here's some currencies for you. It's pretty nice work. I think this one is sort of, once again, proof that these techniques are pretty robust. So it had been at Z2 and he was looking to get short there. He missed the opening entry. He was asleep. That's fair enough. But he gets the owl entry to the short side. So that means strong move, P1, RLXD happens. Dragon rolls over, 30 rolls over. That makes this an owl. And he puts his stop right there where you should. And he gets a nice move down and exit here. Uh, 1.1. He stopped in reverse to go long. It rolls over. He exits here. Takes an entry here. Exit here for 0.7. What I like about this one was after this consolidation, he gets the re-entry and just smashes it. And nets 4R for the day. Good day at work. Notice this owl entry coincides with our good friend the owl. This is where you start the warning that it failed to fail further and it's starting to flatten out, and that's what's happening in here. And then his owl entry here. Nice work. These were the two from Ride. I covered those yesterday, so those comments are still in play. But now the comments hadn't been added, but he's got them in here now. So those were the same. The comments I made yesterday still apply. This is a nice work Was this Matthew? Yeah, Matthew has done a nice job of integrating a note sheet for daily reflections and daily self-assessment. And so he's using the planning process that we like. So he's looking by plan, prepare, execute, and assess. These are the steps in our process. And then he's looking for things to sustain, improve, and then specific action steps, right? And then the 5 elements of feedback to sort of get the emotional components. What feels like the best thing, out of everything that was up there, like on the sustains and improves and the insights, what was the best thing? What was the worst thing? And I kind of like this. He's got what was the best thing of all the things to sustain. What's the best? And maybe what's the least one that he might sustain it, but could do better. Emotional content for gratitude, best takeaway and aha moments, and the biggest questions. So a nice way to systematically review your inner space, but always leading towards actionable steps. And then this becomes your accountable actions. And what I would say on the assessment is the previous day's call to action that you committed to, did you do those today? Because if you're committing to things to act on, but then you don't, that's why you need the accountability to double check that you're following through. That's why I like to pick 1 or 2 things each day and just get a little bit better, focus like a laser, crush it, and then move on. From Bob, we both like zero hedge. Some interesting things. There's a nice view sort of the fundamentals and momentum within the markets. These guys at Nomura talk about, contractions, recoveries, expansions, and slowdowns as a function of Fed action. And so we're in the slowdown phase according to their model. So shorter term growth, more system shocks for profit taking as people recognize the slowdown. All right, here's Luke. 6R. It's coming to be, we're starting to expect that of you now, Luke. No pressure. Up to 1,200 trades. No. Nice gap up. Recovery. So he buys it with a stop. Takes 0.8. Waits for the dragon to roll over. Tries the short. Cuts it short. I want you to get this right away. There's no reason to wait for that. If you get it here and it comes back here, you should be scratching that instead of minus 0.6. And then this one should be here at the PSAR. And at least it's a scratch. Caught a 2 re-entry. For 1, that's good. The 1, 2, 3 entry was here. You waited for the dragon to breach. I don't mind that, I suppose. But that's about 0.3 extra, which then pays for this one. Good reversal after the PSAR flip. Good dragon here. Collapsing dragon. So you take that line across from where the RL10 bottomed out. And when that breaches, there's your second entry, especially as it's crossing the VWAP. When that crosses the VWAP and a collapsing dragon, boy, that's all kinds of short. Look how that thing collapses when the support disappears. Third position. Remember, when you got 3 positions in, when you give up this much, that's as much as 1R. That give back here is a 3R give back because you've got 3 positions on. So the little bit of retracement that you're given back here, that may be okay if you got a single position that's already deep in the money, but you got 3. You got to remember that that exaggerates that move by 3. And I don't know if you're recognizing that. In fact, I would advise you, until you kind of come to grips with that, I wouldn't put the third positions in, and then just refine, be a little more aggressive on your exits when you have the 2 positions in. This is a good Kata 2 reentry. See, like this is I don't mind that on a single position, but if you'd had 2 positions on and then you let that second position go negative, that wipes out this one. That's why when you put the second position on, you've got to be stricter, not more relaxed. You can't let the good feelings of getting a second position in lull yourself to sleep. Better to be really sharp and accurate on fewer positions. Nice fractional, good fractional. 6R, this probably should have been 10. Here's another one on the Aussie dollar and the US dollar pair. $11.5R, not bad. Here's a quick hit. Gets paid. He's going short here on the collapsing dragon and covers at the just before the PSAR flip. Might have PSAR flipped this and gotten that piece. Gets a fractional. Oh, I'm sorry. He goes short here. So for John, if you when you're going short on that opening, make that red so that we can see that, because that feels like, I was wondering why you would go long here, but that was really a failed short. Trying the breakout, that's a reasonable play. It's like at an all-time high. It's already had one surge. Now that didn't follow through, but there's a good chance this can go. So that's a good quick exit. I'd say go ahead and get short again right here on the PSAR flip instead of here. Although I appreciate why you would wait until it leaves the river and breaks the RL 270. So that's not bad. And that's a good second entry, good third entry, a little slow on the recovery, but really only 1 bar slow. And the same guidance that when you get 3 positions in, you're given back 3 times the gains instead of just 1. So that's a nice move in there. You got the move of the day plus a good extra little piece. So 11.5R in currencies, for crying out loud. On a 5-minute chart, that's certainly manageable. All right, that's all the charts from today. All right, dashboard 1, still bullish, volatile. We got a little better on the short-term indicators, but again, only the long-term is overbought. Still red bullish. Market's still volatile. Risk Z warning us, reminder, abnormal volatility. Caution. Just one doji today. Lots of auto framers to choose from. There's Merck at 6.3 to 1. And I like Microsoft at 2.8. If there's going to be any legs tomorrow, and if tech plays catch up, you would think Microsoft and Apple both should be in a position to work. Tons of auto framers. I'm liking Brazil here. This little 1 day, 10 day, 1 month outperformance is really a stealth move. All kinds of auto framers for you to work through. I like the Russell in here at 3.6 to 1 based on its strong move today. And mid caps too, if you're into the indexes. And even the Dow's looking pretty good at 3 to 1. No real squeezes to note. Still being dominated by the winter now. So don't let today's good move lull you. American Express, Boeing, Goldman had some gains today. Cisco. Treasuries, Latin America, Brazil, and Mexico. I guess those are the ones that I'm really intrigued by. And I like the strength we had in finance today. That was all right. And that's everything I want to look at for today. So tactical ops tomorrow, once more. Tactical Friday. This is not a market I want to hold over the weekend. So I'm going to be all kinds of tactical and sleep well this weekend. And then again, this weekend, the research weekend. And these are the times: 10 to 11, 11 to 12, 12 to 1, Saturday and Sunday. Depending on how many of the awaiting papers I get, I'll make a call on whether or not we do the Sunday night. That'll roll right into the the regular podcasts tomorrow night and Sunday night. We'll do the foundations Q&A after the research weekend, but I didn't see any questions in the stack, so that may be a moot point. Okay. All right. Take good care, guys. That's all I got for you. And we shall see you tomorrow.